Hello, Legacy with Dad here, and today we're on the 10th lesson. Wow, didn't think I'll go this far. But in today's lesson, we're going to discuss the 10% law. Now, what is the 10% law? Saving 10% of everything that you make is literally sending money to your future self with interest. This is your built wealth account. Every dollar that goes in have a mission to help you get to the goal that you want to get to. Whether it's financial freedom, whether it's to save up money to purchase your first real estate asset, whether it's to reinvest it to, start a business or whatever the case may be. But this is your wealth building account. And it's very important that you understand that from the beginning. This account is used to build wealth. So discipline is key. You have to be disciplined. This is money that you are using to build your wealth. So you have to remain disciplined and you have to do it because it's very important for your future self. You must have a budget in place. Okay. You cannot do this whole system if you don't have a budget in place. You're going to fail. Miserably fail. Like there's no ifs, ands, or buts. You got to know how much money is coming in. You got to know how much money is going out. You have to have a budget in place. If you do not have a budget in place, you may want to definitely pick up the Dave Ramsey book, which I covered in an earlier session, because you need a foundation of understanding what comes in and what goes out. Learn to live on 90% of your income. Now, this could be very difficult to some people, but from what I learned by doing the Dave Ramsey plan myself, by following the steps in that book, it helped me to free up income. Paying off debt, okay, reallocating funds, creating emergency funds. It helped me free up my income so that way I can put the system in place. So hopefully my children at this point, you're off, you're starting, you don't have a high debt to income ratio. You listen to your dad this whole time and now you're getting started. So it should be very easy for you to live on 90% of your income because you don't have any debt, no student loan debt, no credit card debt, no car payment debt. You don't have no debt at all, which is perfect for starting the system. Now, not to say that anyone can't do it. Anyone can do a system. You just got to clean up your mess first. You got to be able to clean up your mess. And if you're not willing to clean up your mess, no system you ever going to try is going to work for you because you're not willing to go ahead and pay off that debt to free up your cash flow. Ways to save in this 10% count. A lot of us, we're starting off, we're going to work for a company. That company hopefully allows you to do what's called a direct deposit. What a lot of people don't realize is that on that direct deposit form, it has where you can set money aside and send it to whatever account of your choice. What I do is I have 90% of my paycheck comes into my checking account and then 10% goes into my Capital One savings account. 0.5% it pays, which you're not going to get rich off the account. The purpose of the account is to use it to reallocate. Number one, get paid. This is standard. You trade time for money. Okay, you work extra jobs, work a second job, do whatever you got to do to build up that income so that way you can move forward with the system. So moving on to number two is your main checking account. Okay, this main checking account is where 90% of all your pay goes into this account. Hopefully you have completed and done a budget and know how much money you make per month compared to how much money you spend per month. Here's where it gets important. With the 90% inside of your main checking account, if you know your total bills per month is an X amount of dollars, then what you can do is you can say, okay, every paycheck I'm going to take $7, $8, $9, $1,000, $1,500 and move it to my bills account because that's how much I need per paycheck to put in my bills account in order to cover all my liabilities. From that point, whatever's left in the main deposit, you have two choices at the end of the month, not the middle of the month, but at the end of the month. You can take that and rotate that into anything over $500 because I do suggest you keep a minimum of $500 in that account. You can start off slow. If your income is not that high, you can start off with leaving a minimum of $100, $200, $300, $400 till you reach the $500 goal. But anything over 500 that's left in that account after you transfer money out for your bills, you can use that to pay for, obviously your food expenditures, if you need to buy clothes or anything like that. But if you're very disciplined children like me, anything over top of $500, if I don't need extra food, if I don't need any of those clothing or anything, I transfer that into my savings account to help build the emergency fund. Number 3, the bills account. This account is strictly used to pay for your liabilities. Liabilities meaning your rent, your electric, your cable bill, your cell phone. Any bill that must be paid per month will come out of this account. Okay. I typically leave like clothing and food coming out of the main checking account because it fluctuates. It goes up and down every month. It's not steady unless you're a real hardcore budgeter and can make it steady, which is fine. All good for me. Okay. But the bills account is to, like I said, pay for liabilities. It could be your car insurance. It could be your car notes. Anything that you have to monthly pay should come out of the bills account. There may be a little bit left over. There may be not that much left over. But over time, I want you guys to work on putting a minimum balance of all times of $1,000 in this account. It's going to be hard to start in the beginning, but you can start off by 100 and then next month try to aim for 200 and then 300, 400, 500, build it up. Okay. You'll definitely get there. You just got to be patient and diligent and work towards it. Number 4, which is your emergency fund. This is your 6-month emergency fund. This is going to take the longest to build because you're taking 6 months of whatever your bills are and putting it all in that one account. That's going to take, it could take a year, it could take a year and a half. It all depends on how much income you have coming in. Keep in mind that whatever's left out of your main deposit gets transferred at the end of the month minus 500 to your emergency fund. So if you're working extra jobs and you're building up real quick, your income, this account shouldn't take long to build. So 6 months in an emergency fund. Now, once your emergency fund is fully funded with the 6 months, then you move over to taking that money and moving it over to your 10% account, your 10% savings account. This is your wealth building account. That account is literally your putting money in that account, one, to help pay for your Roth IRA. The next step is to save the money for purchasing of assets, to open a business, or you can use it to buy real estate that you can rent to people to make money, or any other thing. This is called your asset build wealth account. Okay. Keep in mind that the proceeds in this account you want to use as an asset. And what I mean by that is what I just discussed. You really don't want to use that to purchase a personal vehicle. Not smart. A personal car is a liability. It's not an asset. You don't want to use it to, gambling or anything like that. This is your wealth building account. Okay. Your Roth IRA grows tax free. You can pull it out at 59.5. It's very hard for me in this video to explain what to do minus a Roth IRA because everyone has their own strategy of what they want to do to get to that goal line. So I don't want to be, do this, do this, do that, do this, do that. Children, you got to make decisions. My job is to give you the knowledge, but you got to make the decisions. You got to make the decisions to follow the plan in which your father has laid out for you, or go a little bit off track to find your own way. But one thing I want to make sure that you guys understand is that you can't say you didn't learn, that you didn't get the knowledge. So at this point, what you do in that 10% account is your decision. I do have a video which I do show what I do with the 10% savings account that I have through the business. But children, you got to build wealth, and you got to do it yourself. Okay. It's my job to give you the knowledge, but you have to navigate that knowledge. That's all part of living life. That's all part of making good decisions and bad decisions. I don't want to be one of those type of parents that say, you must do it this way, because what worked for me right now may not work for you in the near future. What worked for me right now may cause devastation for you in the near future. I don't know, but my idea is to give you the tools so that way you can make the best decision for what you have. My final note to the viewer, keep in mind, this is for my children. This is an outline system that I have taught my children, and that I'm going to constantly educate them on this system. that I have here. My children are very young, so I have plenty of time. But I kind of want to address some of the things that may come up. I get it. You can't put $500 as a minimum in your main checking account. That's where the budget and discipline comes into play. If you're not making enough money, if your budget is running negative every month, you need to work more jobs or cut your overhead, cut your liabilities. It is very doable. You can start off with $100 saved as a minimum inside your main checking account and then upgrade it as you go. Next month, aim for 200. Next month, aim for 300. Next month, aim for 400. It all breaks down into your budget. Moving on to the bills account. Have a minimum of $1,000 in your bills account. That is very doable. I just explained a second ago how to do that. It is doable. It's called discipline. Reason why I feel as though this financial system works and I'm teaching it to my kids is, think of it from this way. If, let's say, someone actually follows it, and even if they get paid, I don't know, 30, 40,000 a year after taxes, it may take them a long time to get these accounts to where they are, and definitely take a long time to get them to their 6-month emergency fund. But at the end of the day, it's stair steps. You can't expect to just start off and the system works from the gate. It's a guide to start getting yourself to where you need to be. It may take a year. It may take 2 years to get to where you need to be in this process. But at the end of the day, you got to start somewhere. And this is what I'm teaching my kids. Okay. So imagine, let's look at this. You have a minimum of $500 at all times inside your primary checking account. Most people don't have that. You have a minimum of $1,000 left over after you pay your bills. No one really has that. You have a 6-month emergency fund. So if you lose your job today, you could pay your bills for up to 6 months. Definitely a lot of people don't have that. Those three combined shows that you're building wealth. The 10% that you're sending to the savings account, or what's called the wealth building account, that's just on top of that. That's for your Roth IRA. That's where when you're ready to start getting into assets, if you want to get into real estate or whatever a person may choose. This is a system that I feel it works because one, I do it myself, and two, I'm teaching it to my kids. So if it doesn't work for you, it doesn't work for you. Yeah, I get it. Oh, well, he's going to have you open up 4 bank accounts, 2 checking, 2 savings. I know people with 9 checking accounts. I know people with 6 bank accounts. I met one person who said had 11 bank accounts, which made no sense to me at all. 4 bank accounts create structure. You have your main deposit, you have your bills, which pays all your liabilities, you have your first savings account, which is for your emergency fund, and then you have your 10% savings account for future investing in assets. Oh, it may be too hard for me to manage these accounts. Then you need to go back to the David Ramsey book, put your ego to the side, and realize that if you want to hit those goals, this is exactly what you need to do. You need structure, you need discipline. You got to do it. There's no ifs, ands, or buts. Now, no one's saying to you guys that you have to follow what I put here, but so far, everyone who I show it to says it's 100% genius, and they wish I brought it to them earlier. So obviously it works. I'm doing it. It works. You just got to get out and do it. If this system don't work for you and you want to stay on the Dave Ramsey system, be my guest. Dave Ramsey knows what he's talking about. This is a system that I developed that works personally for me. It may not work personally for you. So you just got to figure out what works best for you. But if your system that you have right now is not building you wealth, then obviously something needs to change. So that's all I have to say about that. Like I said, you can do whatever you choose to do, but at the end of the day, it's a game of who can cross that finish line when building wealth. It's not a race. It's not a marathon. It's if you got the knowledge to be able to cross that finish line. If you don't have the knowledge, it's not going to happen.